up? What's up, everybody? Welcome aboard to Bubba's Bottom Line. Todd, Bubba Horwitz with you. And what's going on, everybody? Hope everybody's going to have a great 4th of July. And, of course, my special message to everybody, but especially veterans, service workers, and their families. I thank you. There's not enough words I could put out there to say thanks for serving this country, thanks for taking care of this country, and thanks for allowing me to do the things that I do. Because without you, I couldn't do it. And I do think that it's a crime that past government has not been able to take care of the veterans, and I think that this is a real serious problem. And I'm glad to see that that Donald Trump is trying, and he did a great speech at the War Memorial the other day, and for the veterans. And I think that this is something that needs to be done. The bottom line is, if without you guys, we wouldn't have anywhere to be. So I think that that really makes a sense that we need to worry more about taking care of the veterans than we need to worry about everything else. I think that should be one of the #1 priorities, and I think that Trump has made it that. So again, I salute you, I thank you, and keep up the good work, because again, you're underappreciated, especially from those of you from Vietnam. And I think that's just a crime. I mean, you're doing your job, and again, I appreciate you, thank you. And, you know, there's not much I can say without a tear coming to my eye, so I salute you. So, anyways, so we saw last week markets were churning. NASDAQ continues to lose ground. And, of course, we've got the end of the month, end of the quarter, and markets were not very strong. I think that they're kind of limping into the gate here right now. And, of course, on Monday, the day before the holiday, the markets were spiked higher but closed low, not lower, but closed. The futures closed very close to unchanged in the S&P. They got clobbered in the NASDAQ and higher in the Dow. But, again, that's more of, I think, a safety play. I think that's money moving out of some of the others into the Dow. So I think what we're seeing here is a market that's turning. As we've said on this show that we believe that the tops of the markets are in, I think this is indeed very interesting topping action. It does not mean the markets are going to collapse tomorrow. All it means is that the markets, I think, have turned the corner to go lower. Now, what's going to happen from when they go lower? We'll see. We'll see how it trades out. We don't expect a collapse. We're not expecting a calamity. We're expecting a correction and possibly a bear market. Again, if you look at the overall economy, I know we continue to hear every single expert say, well, the earnings are great. We're built on earnings growth. Well, let's evaluate the earnings. Let's evaluate what people think are great. And the first person to ever mention this correctly was Jerry Willis from Fox, who said simply, now this wasn't about the companies, but this is about the debt that all these countries and these states owe, is eventually they're going to have to pay a higher interest rate. What the hell are they going to do? Okay, that's the point. These companies are in debt as well. They have cash, but they are borrowing money, and their balance sheets are based on not on growth. All right, let's get that clear. We don't have growth. How do we know we don't have growth? Because we have a full employment, but less tax receipts. So if we're not getting enough money into the tax bin, that means that we aren't getting enough, we aren't making enough money, which means what I've said all along. We are making less money than we made in 2000, percentage-wise. So let's get away from the BS, and let's really look at the facts instead of the dreams. Right? So if we look at the overall earnings, yes, they're having great growth dollar-wise, but they're not growing people-wise, they're not growing product-wise, and we're not seeing the capital spending. Okay, so what are you really seeing? You're seeing companies that are getting much richer, but what has that done for the guy who's looking for a job? Not a heck of a lot. We've got this major problem with healthcare that is not going to get solved. And I think you heard that. You can understand now they're trying to change another plan. Well, the problem here is that from a healthcare standpoint, average Americans can't pay for it. It's too expensive. We have no free markets in the healthcare world. Without free markets in the healthcare world, there's no price competition. So we have to have a price competition instead of price fixing competition to allow these companies. They whine how much they don't make, and everybody whines about the whole deal. All right, I'll give you just a couple of quick examples. ExxonMobil for years whined about the margins were too tight, the gap, about the whole thing. In the meantime, they always had record profits. So you tell me about the data that they're trying to give you. All right, so we're going to put that to rest. That they're making plenty of money. All right, I don't want. I look at their stock. So if their earnings are so great, then I guess they must be making money. All right, that goes without saying. So let's not pretend that we're stupid, because that's what they're trying to tell you, is that you're stupid because, hey, everything's going great. Well, again, I only ask you to look at yourself. I ask you to look in the mirror and say, how is your life going? And you can make your own decision, because obviously there are some places around the world, around the globe, and around the United States that are doing very well. All right, if you're in tech, if you're a coder, or if you're in there, or if you're in a couple of the majors, or if you're in oil drilling, you're doing very well. But I want to know about the rest. Okay, I want to know about the farmers out there that their crops until recently they just popped. But these popping prices are just getting their prices back to what it cost them to operate. So where is the real growth? Okay, the real growth is in the amount of debt that we've created. And that becomes the next big issue. That's going to be the problem here. The debt in today's world is bigger than the debt in 2008. The auto loan, subprime auto loan, student debt, and various other debts are bigger today than they were in 2008. So what does that mean? Well, eventually that debt has to be satisfied unless we're going to become socialist. All right. Now, again, I know that we don't want to become socialist. I know there's people out there who would like it to be, including the Federal Reserve, who has been striving for this goal for 104 years. All right. They've been trying to turn this into socialism. Why? Because then all the big bankers get to keep all the money. So they want to see it like that. But is that really the way we want it? Now, the answer is no. We want to have the free markets and price discovery model that we've had forever, because that's the only true way of knowing value. Manipulated prices, manipulated markets, manipulated interest rates are never the true value. And when you don't get true value, you can rest assured that the average person gets it stuck up their you-know-what. Because there is no way that they give you the edge, right? The world is about the edge, and that's the competitive spirit, which we've always had, which I agree with, competition. But when you eliminate a big part of the competition because of the way you run regulations, for example, big banks versus little banks. The little banks get killed because their costs are the same as the big banks, but the big banks' profits are much higher. So they're trying to put the little banks out of business with a lot of help from the big banks, because the big banks are trying to eat them up and get them out. Why? Because they want the money. Okay? So you can't say that we're on an even playing field, because if you're on an even playing field, then all of the regulations should be applied based on the size, not based on the industry. That's number one. So that's a big problem, okay, which ties back into fractional reserve banking, and the banks allowed to loan more money, which is just another fact of printing more money, which is why they're never in trouble. And then, of course, they have the Fed's stopping them. So, gee, what could go wrong there? All right. I mean, I don't get it. And to me, it's one of the most ridiculous, annoying things. Now, I'm not a Harvard grad. I'm not an economist. I am a business guy, and I do understand the theory of business. And to me, these idiots do not. And to me, it's either they don't understand, or they don't want to understand, and they want to stick it to the middle class. Take your choice. All right? It's one or the other. There is no way that any logical human being could ever decide what they're trying to decide. So now we've got, of course, the Fed minutes, which is the big talk coming out on Wednesday. Now, what are they going to say? They're not going to say anything. I mean, why are we caring about the Fed minutes? What do we know about the Fed? They're a clueless, legalized Ponzi scheme that is going to do like Mario Draghi does for the ECB, like every other central banker does. They're going to try to continue to manipulate the system until they get their book straight. And they'll never get their book straight, because all they're doing is borrowing more money anyways. How do you think we get a $19 trillion deficit? How do you think that our GDP, our debt to GDP is 104% and going up? And it's not going up slowly. It's going up at a rapid pace because we can't get the growth. Because the guys in Congress, guys and girls in Congress and the Senate, won't pass anything. We've got more of these people spending more time trying to get Donald Trump out as the president versus letting the markets do what they're going to do and let the government be a government. But of course, if they do, it takes away all their edge. It takes away their their continued, maybe they'll have to go on Obamacare. But no, they don't have to. Maybe they'll have to have Social Security. No, they don't have to. So, but that's what they're worried about. Now, you think about that. Why are these people so set against Donald Trump, the President of the United States? He can only be in a maximum of 7 more years, or 7.5. So what difference does it make? Why are they so against every plan that he brings to the table? I'll tell you why. Because they're worried that the way that they've always done things, the way that they've always ripped off the American public, the way that they've always been able to overtax us so that we have to pay their debt that they build so we can pay their salaries. Okay, that's why they don't want him to get his stuff through. Because Donald Trump, you can understand one thing. He's a business guy. He understands how a balance sheet works. He understands that you can't be in more debt. And he did understand because one of his companies or a couple of them went bankrupt in the past. Right? Hey, that happens. But failure makes you better. At the end of the day, unfortunately, the U.S. government's not going bankrupt. And unfortunately, you're going to have the same, as long as we continue to have the same laws and the same people serving, okay, the same dopes that are trying to get Donald Trump out now on mental, on the 25th Amendment, which is another joke, because maybe if they ever read the Constitution, they would know that that's not their decision to try to force him out. You're not forcing him into involuntary bankruptcy or forcing him into an insane asylum. You're trying to force him out, which you can never get him out on the way that you're going. So it's another group of ignorance that shows how dumb these people are and how badly they don't want to give back what they're able to abscond with all the time. Again, you look at it and they always have the view that, hey, it's good for you. We're doing it for you. I hear this on TV all the time. We're doing it for the American people. Yeah, you're sticking it up me for the American people because you want to make sure that you don't change your lifestyle. You want to make sure that your pension stays in place. You want to make sure that your health care stays in place. And you want to make sure that you have the easy life and continue to work with your big constituents and not worry about the rest of the group. I think that's a real shame, and I think that that's a sad thing. But we're going to step out here for a break. But once again, let's thank the veterans. I do salute you once again, and I appreciate you all. And, of course, this is Bubba's Bottom Line, real markets, real people. Make sure you get the Bubba Show every single day at libertytalk.fm. You get the Sporting Edge on the weekends as well, and they're starting to do some live events too, so check them out. In the meantime, we're going to step out here. We'll be right back with more of Bubba's Bottom Line right after the break. Welcome back to Bubba's Bottom Line, and we're cranking today, and got the blood pressure pills out. I had to get the monitor out so I can, because I am worked up, and as you can tell, and I'm really irritated. But I think that I think there's too many things that are flawed here. I think we have too many people involved in the business that are really making America crappy again. I think the vision, and the far right and far left. Again, I don't care what side of the aisle you're on. If you're following wildly or blindly either the far right or the far left, you need to think about it because you're not doing any good to help our country. Okay, the country was built on guys that had slightly different opinions on either side and moving forward. Okay, we should be all Americans first. All right, not Republicans or Democrats. And when did we get so far on the right or left is beyond me. All right, but this is what happens when you have a system that continues to be able to tax. You see, California just went up their tax again to 1.9 cents a gallon. Okay, to do some more absconding of money. All right, because it doesn't go back to where it's supposed to go. So when are we going to see that the money, the taxes we're paying? Illinois just put in a sugar tax of 1% or 1 cent per ounce. All right, on sugar and artificial sweetened drinks. Are we kidding? Right? They're adding 12 cents to my Pepsi every day. I mean, are they nuts? Is this like a joke? All right, that's why they're going broke, because they have no idea how to make the economy function. They just know how to spend money, but not how to get it back. Right? So here we have the big problems, okay? You've got the pension funds, which are in big, big trouble. And I pity and I feel sorry for any of you who are determined on that pension of yours, because there's going to be something's going to happen here pretty soon. Now, I'm not saying tomorrow or the next day, but I'm saying these pensions are not as safe as you think they are, because they're underfunded because of the government, the way they ran them. Okay, I'll give you the perfect example. Illinois teacher's pension hasn't been funded since 1999 by the state. All right, now the state doesn't have that money now. How are these teachers going to get their pension? This is a serious problem, and this is not just the state. General Electric's got pension problems. They've got 31 billion shortfall so far, and unfortunately, they continue to grow every single day. When you pay out more than you take in, obviously we know you're running out of money. Right? So this Ponzi scheme, which that was a Ponzi scheme as well. Again, you can call it what you will, but by actual definition, pension companies, pension funds were taking money from you and paying the pension to somebody else, and somehow they were skimming a little bit of money off the top for themselves, either the brokerage. Again, that's their job. I'm not saying that they shouldn't do that, but a little bit off top. But again, it wasn't enough. But again, eventually, when you do not adjust to how the markets work, to how the world works, and to age changes, you eventually are going to run out of money, because now more of the population is coming up to pension than is putting into the pension. In the meantime, you've got most of these pensions, CalPERS, central states, paying about $3.50 to $4 in out for every dollar they take in. How long can that last? All right, and they have not done a very good job at investing either, and they don't take care of it very well. So I think you see a lot of problems, and I think that has to come back down to the budgets, because if they would do the proper budgeting. Now, I don't know if any of you have already done any business with any government offices before, but they make a budget, and at the end, they want to make sure they spend every dime of it so they get more the next year. All right? It's not that they need it, but you know when a budget's coming due, because all the government offices are packed with salesmen trying to sell them something so they can pump up and get, the salesman gets the commission, the buyer gets more, but what do they need more for? I mean, I remember a couple of years ago saying California said they had a budget surplus. Yeah, they're in trillions of dollars in debt, and they have a budget surplus. Okay, so lastly, but not leastly in this segment is the president of the New York Stock Exchange. Okay, now this is, I know this is wild. I'm almost speechless, but of course you know that I'm never speechless. But he wants to eliminate short selling in the market. And I go, really? Are you kidding me? And the NASDAQ is on board with that as well. Now, what does it say to you? I know what it says to me. It says to me that they want to eliminate free markets altogether, which one they want to make it socialism. Okay, because why would you want to take out one of the biggest components of the markets, which is the ability to short sell? It's the ability to create liquidity in a market that everybody can buy and sell, and you don't have to all be on the buy side or the sell side. You can be on any side. All right? That's how traders make their living. This is a learned skill that you can develop, okay? But yet we have a New York Stock Exchange president that wants to stop that. Now, I go back to 1848 when the first futures exchange was brought on. And it was brought on for what reason? So that farmers could hedge their crops, could hedge their livestock. Okay, well, what do you think was on the other side of those trades? Did you think that it was another hedging reverse on the other side of the trade? There were short sellers. Short sellers make the markets liquid and make the markets competitive. If you take out the short sellers, you take out the competition, because you don't have the ability. If I own a stock that's a heavy in demand, I can just hold out for more money. There's nobody who's going to come in and look and say, oh, mate, this needs to be sold here so somebody can buy it. It makes absolutely no sense. And then for the guy to call it icky, okay, there's your chairman of the New York Stock Exchange, icky, okay, and calling it un-American. Now, I don't know about you, but the America I know is about trying to make money, trying to live the life, the American dream, which is part of capitalism, the way I remember it. Now again, I am getting old, I'm a little senile, so it might not be that anymore, but that was the way I grew up, was that it was about capitalism, and it was about trying to find a way to make the most amount of money and also develop something that would help the most amount of people. But of course, we have everybody who doesn't want the free markets anymore, which is the whole point behind all this manipulation, is the destruction of the free market system. And to me, I think that's just criminal. I don't get it. I don't understand it. I think that these people should get the hell out of here, because that's not the America we have. That is a way of holding down the smaller guy. It's just another taking away of the freedoms that we have, thanks to our veterans out there. We have these freedoms, but they want to take them away. We earned these freedoms going back to the Revolutionary War. And every year, they chip away. They chip away more taxes, Bubba, all this stuff that takes away from us. And now you got the chairman of the New York Stock Exchange saying, hey, we want to ban short selling. They've already made it almost impossible to short sell anyways. You've got you got to sell in an uptick, or you used to have to sell in an uptick. Half the stocks are hard to borrow, and the brokerage houses got no balls. They tell you the stock's hard to borrow. Now you tell me the S&P, the spiders, all right, is one of the hardest to borrow stocks there is. It's only the highest volume every day. It's only the most widely held, but it's hard to borrow. You explain that to me. I don't know. You know, again, I'm rolling today. I think my blood pressure will be about 220 over 120. But we're going to step out here for a break. Again, I want to thank the veterans. I salute you once again, because it does give me the right to do what I do today. And this is Bubba's Bottom Line. We're going to step out here. We'll be right back with more Bubba's Bottom Line, real markets, real people, after the break. And don't forget to get the Bubba Show at libertytalk.fm every day at 2 to 3 Eastern Time, and the Sporting Edge on the weekends. We'll be right back. Welcome back to the Bubba Show. Todd, Bubba Horwitz, and of course, you know, you can't get away without my commentary. And, you know, my commentary today is going to we're going to look at the overall talking heads world and what they do and how they create it, and why it's so bad for you to get involved and try to listen to the garbage that they spew day after day. Look at what you hear. All right, now, the pundits have been cheerleading the markets up, cheering them up every time they go, oh, you're making so much money. Okay, well, how much money is everybody making off of this? And what is your actual benefit off of this? And what did it really do for you? Now, you tell me, all right, would you rather watch your old IRA and 401k grow? Or would you like to get a better job that paid you more money, that you could add more to that, so that when it did grow, you could make more, that you could go back to the standard of living that you used to have, all right? But no, that's not what they're talking about. They're trying to cheer you on, and they're starting to cheer on oil. And I go, oil is a spot where it's going to probably sell off. Oil does not look good here. It's in a downtrend. But why do we have to have so much cheerleading? Why do we have to have so much because it's very deceptive to the average person who might catch an hour here, a half hour there, and doesn't really follow the market. So, oh, the market's going great, I got to step in and buy. All right, now again, all those guys were chirping to buy Google and Amazon like at 1,000, and now they're both 900, down. Now again, I'm not saying they're not going to go back up. What I'm saying is that there's a better way to look at markets, and if you understand how to look at the market scope, if you understand how to look at a chart, how to read technicals first and then fundamentals, because markets are better traded on a technical basis, then you'll find a much more a higher success rate if you learn how to defend your portfolio and not get spooked when things happen. Because I think that we get far too much bad information that is put on the airways about products, and most of that is put on the airways. The pundits are just trying to get earnings and get ratings. But the people that put these out are usually people that want to create a reaction. We've all heard about the stories of the pump and dump schemes. Now, obviously, these markets aren't pump and dump. They're regular, real markets. But it's the same kind of theory behind it. You get enough positive flow, people don't want to miss out, the fear of missing out. So remember that when you're watching the garble and you're watching the nonsense and you're watching oh my God, we're making record highs again, take a look. Take a look at your own portfolio. Because if you have anything but those big 5 stocks, I don't know how much money you're making. All right, and now they're getting clobbered, and we're seeing a little bit of a rally in the finances. But at the end of the day, all right, I urge you, okay, to tune down the opinions. You can listen. I mean, they're fun to listen to. But before you do anything, take a look at what you have and learn a little bit, gain a little knowledge to help you make a better decision going forward. Because most of us make a bad decision based on either something we heard, emotional or whatever, and the days of hot tips are over. So don't follow a hot tip. Nobody knows. First of all, nobody ever really knew. But then, before all this information, you had a chance. Now there's no chance. That information's old by the time you get it. It's a week ago's newspaper. Anyways, again, just, I can't take it. I really hate the drooling and the let's go get him and we're going to the moon and all these guys who say that the markets will never go down again and this time is different. I find that, first of all, irresponsible. Second of all, annoying. And third of all, I'm tired of listening to it. But I got it because I'm part of the media, so I got to listen to what they're saying so I can bitch at it later. Anyways, again, to my veterans and families, thank you so much. It allows me to do what I do. This has been Bubba's Bottom Line, Real Markets, Real People. We'll see you back here next time at Bubba's Bottom Line, Real Markets, Real People. Thanks, everybody. Have a great day. Happy 4th, and be safe, and be good with your families. We'll see you later, everybody.